Hey everyone, Paul here. In today's video, we're going to answer the $47,000 question of should you buy Bitcoin in January 2022? If you already have some Bitcoin, should you buy some more? If you've never bought Bitcoin, is this a good time to buy? In the video, we're going to go through the bullish and bearish cases. Make sure you hang around to the end of the video because we're going to put all of that together and try and make some educated guesses about where we think the market's going to go in January 2020. Let's start off by looking at the daily chart. So if we look at the current pricing in the market, we can see we're stuck in this trading range and we've been there pretty much since the beginning of December. Each time we've come up close to either resistance or support, we've pretty much just bounced back off. We haven't really had a significant retest of either support or resistance while we've been in this trading range. You can see that the lots of overlapping bars, which is indicative of a trading range, but we can see some of these sell candles have been pretty powerful. But the other thing I would say is as this sideways trend continues, we have seen these bars get smaller. Now, I'll talk a bit about volume later on, but this could be a sign of the holidays, also not as many people at their screens. We could start to see the smaller bars because of that. People not really being interested anymore. We can see, or one of the things we should keep in mind is that this bar, whilst it did, or these couple of bars, whilst it did a lot of technical damage, the more bars we put in between us and those bars, the less significant they become. So this sideways trend isn't necessarily a bad thing because it does kind of erase some of the damage that was done by these really high conviction bars to the downside. The other thing that's really important to note is that we're at this really historic low of volatility here. So at the moment we're reading, really low. If we look back, it's pretty much the lowest it's been for probably about a year. Now, if we zoom out a little bit, the reason why this is significant is that we can see every time we hit this really low volatility point, and then we have volatility move upwards afterwards, we get a move in terms of price, either up or down. So in this instance, you can see we touch this low volatility level. We're at this particularly high point in the market pulls back. You can see here, even as volatility drops back again after this initial push, we have then another big push down in price and a spike in volatility. It also works the other way. Didn't quite touch this historic low point here, but it was still quite a low reading, and that resulted in this big push. And so the thing that's important about that is that basically a low volatility reading will result in a significant move in either direction. We don't really have a clear indication on the daily chart why that is. The daily chart in itself is ambiguous. It's probably a little bit more bearish than it is. Well, it's certainly more, but it's definitely bearish. It's definitely bearish. And so basically what we're trying to figure out now is we're in this trading range. Which way are we going to break? One of the interesting things about the zone that we're in at the moment is you can see in between this sort of 52 and 53 and change mark, we've skipped through there both times. And even back here, we tend to skip through this zone. So that's interesting, is I don't think the resistance up here is as significant. But below this current resistance line, there's not much here. We have this spike low here. And obviously if we break below this resistance point at about 40,000, 40.5, down in here, that's not great. If we broke down there, and obviously if we come even further down to this sort of 28,000 mark, that's really bad news, and you'd have to say that the bull run will be pretty much over at this point. So that's down here. I'll just quickly put that in. You can see that's down here at this mark. So sort of sub 29,000. I haven't really sort of put that in too carefully, but down there, you'd say the bull case is definitely dead. So the daily chart doesn't really give us a clear indication, but definitely feels more bearish. So what we'll do is we'll start to look at some other factors that'll help us to figure out where we're going to go outside of this trading range in the next few days. One of the things we can do to help us with our decision making is to follow the money. And the easiest way to do that with Bitcoin is to look at wallet sizes. Obviously, the bigger the wallet, the bigger the whale. So whale is the term that you see used in the market to basically tell us who the smart money is. So looking at wallet sizes over 1,000 Bitcoins, so that's obviously the biggest of the whales, you can see that pretty much most of the year it's been flat. There's been a few times where they've bought, clearly on pullbacks, but at the moment it's still pretty much flat. And so we don't really have an indication that they're buying in the market at the moment. For wallet sizes over 100, we can see that on the pullback, they did buy, but pretty much since that point, since we've hit all-time highs, they've been flat too. So we don't really have a good indication of wallet sizes over 100 Bitcoin that they're actually accumulating in the market either. The weakest indicator is wallet sizes over 10 Bitcoin. As you can see, leading up past the all-time highs, they were accumulating. We can see that the wallet size or the number of wallet sizes was increasing, and then pretty much after the sell-off at the beginning of December, we can just see that those number of wallets at over 10 Bitcoin has dropped pretty dramatically. So that's a pretty bearish indicator right there. Another indicator which isn't exactly positive is wallet sizes over 1 Bitcoin. So that's what you probably consider to be your retail type investors. And they're not very nicely, but often referred to as the dumb money. And you can see that pretty much since July, they've been slowly accumulating through this whole period. So what we see is the smart money, or the whales, pretty much sitting on the sidelines, sitting on their hands, and we see the dumb money, the retail money, accumulating over the whole period. So that's not a particularly good scenario. Ideally, what we'd like to see is money going from the weak hands, from the less informed investors, into the smart money, and that's just not what we're seeing at the moment. So zooming out to the monthly chart, we can clearly see this bullish trend. So you can see the initial all-time high, a higher low, another higher high, which is the all-time high, followed by another higher low. And if this trend is to continue, we'd hope, or we'd expect to see another higher high, which would take us up into this $70,000 to $75,000 zone. The weekly chart for Bitcoin doesn't really look great. You can see quite clearly the initial two trends up to reach the first all-time high, followed by the second all-time high, and then these breaking of the trend, and then the pullbacks afterwards. You can see here where we are now after the all-time high in November. You can see this pullback, and we're now stuck in this trading range. So the trend that we have on the weekly chart is definitely a bearish trend. We can see we're hitting lower lows and lower highs consistently. We've got another lower high here, and you'd expect at the moment that trend's going to continue, and that we would breach this lower low and make another lower low. And if we were to do that, obviously that would suit, because we would break this trading range that we're sitting in at the moment, and I would think that would result in a thrust down past this 39,000-40,000 limit into this zone here in between about 28,000 and about 40,000. So the weekly chart is pretty bearish, certainly not the same strong case that we had in the monthly chart. So Bitcoin dominance is the percentage of Bitcoin as a function of the total or the whole cryptocurrency market cap. Historically, when the market dominance of Bitcoin goes to low levels, generally tends to be a good time to be accumulating Bitcoin. So we can see on the chart here that this has happened a number of times. Here, here, and here, and here, and then again right now. These are historically low levels, so you can see when Bitcoin dominance has gone under 40%, this has generally been a pretty decent time to be accumulating Bitcoin. This time looks probably even better than the previous times, but what you can see is not too soon after, the market's rallied after that. So Bitcoin dominance at a very low or historically low percentage has been a reasonably good indicator that it's a good time to accumulate Bitcoin. This chart's the HODL Wave, and the reason why this is helpful is it shows us the percentage of Bitcoin that basically hasn't moved from one wallet to another by percentage. And the reason why I like this is that at certain periods you can see when the wave starts to turn upwards, which is what we're seeing now, you generally go into periods where it's a really good indication that it's a good time to start accumulating Bitcoin. So I think this is a pretty good indicator of a time to buy relative safety. It can also be used to help try and time tops and bottoms in terms of entrances. But I think just in terms of the actual wave itself, these times when it starts to kick up, they're pretty good indicators that it's a good time to start accumulating Bitcoin. So I think this chart now pointing up at the moment, this percentage of holders that haven't moved pointing up is a bullish sign, and it gives us an indication that it's a good time to start accumulating. So the Bitcoin bears definitely spoiled our 2021 Santa rally. But as we can see here from this analyst, January has been a really kind month for Bitcoin in past years, particularly 2020 and 2021. So that's obviously some recency bias, not necessarily a guarantee that we'll get the same thing in 2022, but nevertheless, it's a pretty good trend. If we look at volume at the moment, volume generally not an indicator I put too much weight on, but you can see here the volume at the moment is particularly low. Hasn't been this low till post July. That's obviously a symptom of what's happening at this time of the year. Lots of people are on holidays and just not sitting at their screens. And this low volume we're also seeing in the chart patterns in terms of those smaller candles. This low volume signal, similar to as we've had here, again, was a pretty good sign that it was a time to be accumulating Bitcoin. So if we look at the past data on January returns, the low volume, these are also good indications that we'll have a bullish January in 2022. So what do we think all this means for Bitcoin as we go into January 2022? Well, I'm leaning towards the bullish case, but I've got to admit, only just. We've got a number of indicators which suggest it's a good time to accumulate Bitcoin, that being Bitcoin dominance, low volume, and also the HODL wave. So we've seen traditionally or historically there have been good times to accumulate Bitcoin. They have been in the past, so I'd reasonably expect that they will be right now. The monthly trend is still intact, and we know that January has been traditionally a good time to buy Bitcoin in terms of performance. Well, it has been for the last 4 years anyway, and particularly in 2021 and 2020. But I've got to say, I'm pretty concerned about that low volatility figure. I really feel that this favours a shot to the downside, and it is a concern that we still have the whales, the smart money sitting on the sidelines while we have retail accumulating Bitcoin at this current point in the market. So how could this play out? Let's jump back to our daily chart and run through some scenarios and see where we think the most likely outcomes are going to be. Now, it's probably the least probable case, but let's start with what the bearish case might look like. So again, this is because of this really low volatility reading here. I'm just a little bit concerned about that. I just feel that low volatility reading could result in a significant push lower, and that could look something like this. We could retest this support level and then push down into this zone here. Now, I don't think that's necessarily the end of the bull market or anything like that, but it would be pretty damaging. As long as we don't go through this support level down here at 29,000 or so, things would still be okay. It'd take a long time to recover. It'd be pretty awful. It would only really be if we went down into this zone that really significant damage would be done, and you'd say that the bull market is pretty much dead at that point. The most probable outcome is a push to the upside, is the bullish case. So I think how we would see that is a retest of that support level before a push higher, and then it may continue on from there, or we could potentially retest that support zone before pushing higher again. I think either of those two outcomes is the most likely outcome. And I think the interesting thing here too is that we have this zone here, and I've marked it out just because historically, certainly in recent history anyway, that we've just skipped through that zone. So I think that adds to the thrust higher and could make that a more significant push higher. Now, the slightly less probable outcome, but it's still reasonably possible, and it kind of supports the analysis we did in terms of the smart money sitting on the sidelines, is that we could have this retest of the support and then a further push downwards. And we could go lower than this capitulation bar here. We may go a bit shorter. I don't know if it really matters too much, But then what we'd expect to see is, really aggressive buying. So we would see all of those whales, all of those big wallets come in from the sideline, and this thrust downwards would really be, a strong capitulation. We'd see all those weak hands get bought out, so we'd see the whales come in, and then I think we'd see a really strong rally to the upside. So I don't think that's as likely as the first bullish case, but I still think it's a pretty decent possibility. And in some ways, it's probably a better longer term outcome, because what we would see is a shakeout of all the remaining weak hands. Not that there'd be too many left at the moment. Anyone who's still hanging in there is feeling pretty brave, but we would get that really significant push upside as a result of that. It would add a lot of fuel to that fire. So that's my summary of what I think Bitcoin's going to do as we go into January 2022. I hope that was helpful, and let's see how we go.